Okay, we're streaming. So let's see, hey everybody, and we're just getting set up here. Let's let everyone in. Everyone, let's go ahead, Myrene, and get started.
Recording in progress.
Okay, everybody, it's Brett from Moonstream here. I'm back from a brief getaway, and we are streaming on YouTube here today. So if you'd like to find us, you can find us at moonstream.io on YouTube, and if we can drop the link for that into the chat. Irene, if we can find that. And I know some of you wanted to share that around. Well, so lots going on here in the markets. And so we are going to unpack everything here. Of course, we were anticipating this big red candle here in May. So I'm going to make sure I've got all my controls up as I need them so that we can move me around if I need to. I'll try to not cover the radar this week in the lower right-hand corner. But let's let's go ahead and dive in. So basically, the biggest thing here, and we'll talk about why, and especially in M3 Active Trader, you guys know we've been talking about this scenario. If we get a big monthly red candle on Bitcoin, then that's not so good. I was hoping that we would kind of finish in the middle around 65K to have that red month and then have some ability to continue pushing higher. If we were to put on, say an exponential moving average, we have the 50-month down here. The 21 is going to be in this area here. Just turn that on really quickly. It's a bit lower. So here's the bottom line, though. If it's the last day of the month, if we close here and it's bearish engulfing, then I think we do drift lower into this 52K region. Certainly some more pullback would be likely. And if we were to draw that here, I know it's not what anybody wants to hear, but it's important to have a roadmap and be ready for these things when they happen. Now, TradingView is a little bit wonky here lately as far as drawing things, studies over studies. So I'm going to have to draw it over there and then reposition it. But let's see, not that. Yeah, they must have they've changed something in the way this thing works. They've made it a little bit ornery, but this kind of a thing. So 52,000. I'm going to show some other charts here where like 52K, 51.5, I think would be the bottom if this continues lower. Again, bearish engulfing candle on the monthly, unless we get an end of day rally. But I don't see that, everybody. I don't see that at this point. So we have to be aware of that. These bearish engulfing candles do tend to continue. And I thought we would probably rally into May, but we'll have to wait and see. The Hong Kong ETF was the wild card here. It wasn't as successful as people thought. So we want to follow our signals and just make sure that look, we can't predict the future. And what we can do, though, is follow our signals. And, of course, this is our Crypto Mastery class talking about our signals that we're using. And today I'm looking at here the TSI Pro here is rolling over. We don't have a red confirmation yet, but we are in the overbought territory. These cycles do tend to play out. And once we break that 80 line on the TSI or the TSI Pro, that generally indicates that this is going to head lower. So we're going to watch this on this monthly time frame. What we'd be hopeful for is some kind of a bounce like this, maybe come down a little bit. Now, these are monthly candles, though, so we don't really want to see a full 3, 4, 5 months going down. Best time to buy was January 2023, and we were telling people to get in to the markets back then, kind of based on this TSI going green, and our early reversal indicator also going green back here on the monthly time frame. So if you're watching this and you don't yet have our Crypto Mastery indicators, like this early reversal indicator here, and then the confirmation being this TSI going green, and now our new RSI Pro, which is amazing. Now, the good news is it also signaled back in January to get into the markets. The bad news is we are printing a red dot on the RSI Pro, signaling that we may have put in a near-term market top. And I've been speculating, do we see a double peak cycle like we did back in 2023? So it's really a tenuous position here. We don't really know what we're going to do. It's the last day. This is about to print. So going into May, the last two times we saw this were back in January 18 and back in April of 2021. Now, that does not mean prices can't continue higher, but it does often signify the market top or a market top, even though Back here, many people believe this was the market cycle top, and the push up here was the upthrust after distribution if you follow the Wyckoff patterns typically. And often you'll see that in the stock market. It'll push up here, and where the whales and the big institutions and buyers are starting to distribute and mark down price. So the accumulation zones down here in the Wyckoff patterns, and then distribution up here, typically marked by fake out breakdowns and faked out breakouts to the upside. So that's what this was. What I want to call your attention to again are these RSI tops. This is our newest indicator in the Crypto Mastery Pro signals. If you'd like to find out more about those, you can go over to cryptomastery.org. If you're trading without these, you're trading at a disadvantage. These were developed by a quant engineer programmer, one of my partners here at Moonstream and Crypto Mastery, and he's a professional trader. He's been spending over a decade building automated algorithmic trading systems and indicators. And so cryptomastery.org have a special right now for $4.97. That's $97 a month, and you get a month free. Can't afford not to have these, everybody. No matter what else you're using, if you're using a stochastics and an RSI and all that other stuff, you are using what everyone else is using. If you want an edge in these markets and want to know where we're going, this is what I'd highly recommend you go get. So with that, and then we're going to get into some news. I just wanted to lead off with the markets here just so we have an idea. Also on the regular RSI, I think I just closed that accidentally. Let's take a look at monthly time frame here, and I'll pop up our radar too, by the way. And since I'm covering the radar, let me move me over. I'll go over here for now. There you go. So the down in the right-hand corner, this is one of our signals here called the radar, and it is a multi-time frame radar. You guys, it's all red. Red is, we developed this to mark the market cycle tops. This is not what anybody wanted or expected, but we now have a triple top on these markets here. And so the fact that we failed to kind of break back above that 72,000 level and hold, and we have a bearish engulfing candle right here, I do expect accelerated selling. This could be a lot steeper here as well. So we get down in the zone earlier. It's just not easy to tell at this point. Also, our average true range is still in bullish territory. We'll get to that later, but I want to call your attention to this multi-time frame radar. Now, I'm going to go in here, and I'm going to change the settings. The 4-hour, the default is 4-hour daily, weekly, monthly we have. So these are our near-term settings, are bearish. So we are looking at a deeper pullback on this. If we want to change these, sometimes I'll look at a little bit longer time frame and change it to daily, weekly, and then monthly and quarterly. So you can do that very easily down here in the settings. So, and of course, 3 months would be quarterly. So we'll do that and hit OK. So we have still a little bit of glimmer of hope. We bullish on the quarterly chart. So we still are in a macro bull structure here. We just look at this. We call it, it's a new pattern I've coined, the ladder. And when we start seeing this kind of vertical climb, like a fireman's ladder, and then you see sort of the hook at the end where it's hanging on to the house, that is a signal to get out of the markets. And so I have been saying I expected we'd continue higher in May. At this point, I don't know that that is likely. We have this bearish engulfing candle, and so that tells me we have to learn not to question these. That tells me more than likely we do head lower into May and possibly June. That certainly isn't helped by the Fed sort of indicating, signaling they're not going to raise rates anytime soon. And so that quantitative easing may be farther out. And in case you're wondering, what about the halving? The halving really does not push prices higher, and that's a mistake. It coincides with liquidity cycles when the government starts pushing money back into the economy. Started to see that in China and other countries, have not started to see that yet. Yet here in the U.S., we do have an election cycle coming up here, so nothing to worry about too much. I would suggest lightening some positions here so that you have cash available to buy the dip. And the dip could be down in this 50K region at this point. Really hard to say. We'll be waiting for our signals to go back to green on the daily, weekly, and of course monthly to really go into this market. So at this point, I'm mostly out of the market. I am buying some altcoins that are holding up nicely and have some good potential. But for the most part, as Bitcoin leads, the rest of the alts will follow. Pardon me. So, and our order block detector. Now, here's the thing. We have been following this quite a bit. There's a very heavy buy block down at the 16.5 region. I do not think we go back down to 16.5. That would obviously be bad. But however, you can see all these buy orders here on the monthly time frame. We don't really see that so much coming into play on the monthly time frame. This is another one of our indicators in the Pro Pack. These order blocks, where we do see it is on the weekly time frame. We'll get to all this here in a moment. And but yeah, we've got a lot of signals here telling us that we should head lower, although we do have a bullish buy block here in this weekly time frame, so that's interesting. We are in a downward trending channel, so if we can hold this 60K version, maybe that we continue to push higher and that bearish engulfing candle doesn't come into play, but typically we would see that. So let me just pull down to a daily chart here. Now we've got, here's the thing, we've been sandwiched between daily buy blocks and sell blocks. So this big red block right here, heavy sell pressure all through that 66K region, and we have these strong buy signals or buy blocks down here. So I've been saying for a while now that we would come down to the 60K region, and we did. We dipped down into this. I'm covering the chart here. I'm going to move this over here. So over on this side, maybe I should just stay in the middle. No, so basically down in this region, yeah, so these buy blocks coming down to the 60K region, bounce out. I have been saying we come and retest that darker green, and so that's where we are. The green buy blocks do go down deeper here into this 58K region. So in this downtrending channel, we have some time, I think, for at least a few weeks. We drift down into this region and then head higher if we're going to. So we'll monitor the signals. As of now, the radar is still red. Not a time to be buying, everybody. Green is go. We want to be buying when we have our signals on the green side. So we'll pull up the chart and answer any questions here in a minute if you guys have any questions. Back to the monthly, though, I did want to finish unpacking this. We have on the RSI heading down lower, and so this could easily come down to this 60 range, and the money flow indicator also was heading down before I actually closed it. The MACD, this is what we used predominantly and partially to call the last market cycle top, along with our other indicators, and so we're getting a bit of frothy on this the MACD. We'll keep an eye on it, though. We've got some time on this. Now, these are sort of slow lagging indicators, so they're not our favorites in terms of that. We may want to pull up here just to see and have a look at the Pi cycle top just to see what's going on there. We haven't looked at that in a while, and that is a free indicator. Now it's it's pretty good. Pi cycle bottom top indicator. There's a couple versions of that here, so I'll go ahead and put that on as well. So let's see, this one here, and it's a bit hard to read. We're not anywhere really near it. It's not crossing over, so maybe we'll do this. I have a different study for that, actually, so I can pull that up if we want to look at that. You guys want to look at that? That might be fun. So I'll load a layout here. Somewhere in here I have Pi cycle top here, the two indicators that we like to see here. The Bitcoin Pi cycle top daily. So I had projected that out. The Pi cycle top is not anywhere near where we thought it would be. So that was the Pi cycle top did mark the last cycle high. And of course we thought, hey, we're going to 100,000. This has to be wrong. And of course it wasn't. So the Pi cycle top is marked when this orange moving average crosses over the green moving average. Okay. And so, or the green one crosses through the orange one rather. So, Ian, I'm sorry. No, it's not. It's the opposite. So the shorter moving average is the orange one, and when it crosses over the green one, that's the Pi cycle top. Even if it only barely touches, even though it did, so it didn't stay up, doesn't have to stay up there longer. And so we'll watch this. We had that double top here again in 2013. This is certainly on the table, everybody, and we had a 73% drop on Bitcoin before rallying off the bottom and cruising up to that new all-time high. I've been saying that for a while. That would be max pain. We have to be open and nimble and open to that idea. But at any rate, so we're going to look at this here. Pi cycle top, we're nowhere near this at this point. So I was speculating it might be up here much higher, but at this point on this daily time frame, it would put it out to potentially 100K. I'm going to say this is not looking to be playing out anymore. It was following fairly closely. So I'm going to put this down below there. But basically, just projecting it out, we'll have to see. But not this is not the cycle top. This is according to this. However, I'm following our indicators, which are saying we're going to kind of come down a bit lower. Again, this 58K region, I will also call attention to on this Pi cycle top indicator, this orange line, which is, let me just show you this. I have it on here twice. It is the moving average, the 111-day moving average. And so it has been pretty accurate in calling for the, or containing price action is a better word. So we have it come up and rejecting back here on that green line, and we have it rejecting back here before pushing up above it. And then once it came back down below that green line, things really fell through. So we're again rejected on the green line of the Pi cycle top. Also on the shorter one, this also has tended to be kind of a rejection area, rejected here, 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 and also acted as support. So on the bullish side, back here, we saw it bounce off of this. This is the 111 moving average there. And you can see it's not exact. There's maybe better ones, but it gives a good approximation. So, you know, we're still kind of in this zone. We could come down to this 58K area and push up higher on that. And so I'm sort of leaning toward that, except for that big bearish candle on the bearish engulfing candle on the monthly. Who knows, you guys? We have to see how the end of the day happens. I don't see any reason for us to get a big rally end of day, but you never know. Volume has been down, and the buyers are scarce. We'll get into some of the news because the ETF outflows have been 4 days straight, and no inflows and mostly outflows. So, but I want to talk about just overall market. Bitcoin down 5%, Ethereum 7%. You know, quite a bit of red in here, you guys, as the leader, Bitcoin and Ethereum as they go down. Not entirely unexpected. Ethereum could go down below 2,800, I believe. So we'll look at that here. Let's see. Peter Brett predicts Bitcoin to bull run until 2025. Really big question mark there. I really thought we would see a left translated cycle and a much higher push. So I'm still staying open to that possibility. So on the liquidation heat map, ETH has 7 million in. This is the 1 hour. Let's go to a 24-hour liquidations. And we can see that down in the corner. 24 hours, 315 million in direct, mostly on the long side. People that were leveraged long getting wrecked there because, of course, prices are heading lower. The shorts doing a little bit better here, only losing 58 million only. What's a couple million among friends? It's kind of amazing the volume in these markets if you've been around for any length of time, but that's good for us. So typically we'll look at the hot movers. Don't really want to do this in a big bear movement correction. We don't want to be going long for the most part. I'm just scanning this list to see if there's any I recognize. AMP is one that we used to trade back 2 years ago, but that really got beat up here. Maybe, nothing really to see here on this chart. So we will come back and look at some charts later. And again, wanting to get more of a macro view on this, where things could go. So here's Bitcoin, and let's also pull up Ethereum that we just talked about. So rejecting, I mean, look, it's pretty simple to see in these charts. Downtrending channel. We didn't quite get to the upper channel boundary, but we got below the ice. We call the 21 and 50-day EMAs the ice. So if you fall under the ice, the orange line is thin ice. The green line is your thicker ice. So if you're out on a lake, do you want to be on thin ice or thick ice? Back in here, we dipped down below it briefly and then got back above the thick ice, was able to rally back above the thin ice, but fell back through and then back below. So you guys can kind of see some charts much more easier to see this, but point being bearish, very bearish candle right here. Trying to get above the ice, drowning underwater all through here, trying to get above the 50-day EMA, and of course failing there. So this pullback not unexpected. Will we see some support in this region right around this 3K, wishful thinking. Down to 20, the buy blocks are down around 26. So we want to see if Ethereum holds here, but if Bitcoin loses this level, it will head lower. And you can see I had this on here already. I'll just move it over. So let's say this is the play out, and maybe it goes down to 26.25, and that would be where I'd be buying if our radar starts turning green. I've covered that again. And actually, let's go up here and popping all over the place. So that radar is so important. If it's red, we want to stay out. Also on our daily basis, TSI going red. So these are clear signals to stay out of this, and I would not be buying anything right here, you guys. Let me see. Is our ERI Pro on? We don't have a bearish ERI. That's fine. The TSI is enough to tell us. This red going red here, I would be waiting for this to lose Ethereum. I might actually lighten the load a little bit on some Ethereum here and to free up cash to buy back around this 2630 level. In our order block detector, which is one of our favorite indicators here and one of our part of our Pro Pack. Let me go in here and I'm going to add our Bollinger Band Pro indicator as well, because even though we're not taking profits, usually we're using this as a take profit signal, but we can also get good signals on when to get out of the markets here. So I'll just merge all the scales onto one. We do see the Bollinger Bands tightening. Again, we use a modified Bollinger Band, by the way, not the off-the-shelf version, which does not work for crypto. By the way, if you're using standard Bollinger Bands that use a 2 standard deviation, that's not going to work for you. The volatility of crypto, we want to use a modified one. So you can see over here, we use a modified Bollinger Band, and that is off on our take profit signal because, and you can see these vertical lines, when it gets up above that modified Bollinger Band, the upper band that we've coded to red, and you see this vertical line, it'll either go sideways or sell off here. Almost always. Very highly correlated. Whereas this didn't break the upper Bollinger Band on our version, so it still went up, kind of corrected back to the mean, but you can see another good example of using it for your take profits right in here, selling as this vertical red line signaling this is likely to revert to the mean back into that middle. So again, we see these Bollinger Bands tightening, indicating a move is likely coming, but because the trend is down, it's more than likely going to drop and down in this area here. So with everything I see, I think lower prices for Ethereum, Solana, all of these, and so it's a good time to be getting into cash. I'm not going to give any financial advice here, but it's a good idea to take small losses so that you can buy back lower at an opportune time. Now, Solana looking as quite a bit better here, also tightening Bollinger Bands. And if we draw this here at the former kind of high, it looks remarkably stronger than Bitcoin, Ethereum. We're in a buy block zone. I would consider adding some Solana here if our other indicators also signal that, but I don't like this all red radar. I don't like that our TSI is also red and heading lower. So when in doubt, stay out, everybody. Our signal line is heading lower, so this is a kind of misleading. These buy blocks have a lot of work to do, and look at this. You have to also keep an eye on the volume, diminishing volume down here. Okay, so what that means is very likely it's not going to have the strength to come out of here anytime soon. Probably see it down in this region for a while. Could come back down, into this 110 region, and but we really would rather not see it come all the way back down to 94, 95. Keep in mind, Solana had a hell of a run, however, and it might be fair to kind of draw some Fibonacci's on this and see what some targets would be, likely targets on the downside. And I'm just going to grab this and drag it over here a bit. I'll make it full screen so you guys can follow along. Question is, where do we draw the fibs on this one? A little bit tricky. It's a bit of an art and science. I'm going to use it down here at this sort of pivot swing low, or the pivot back in this region, and just see what we are looking at. So it's pulled right back down into the 50% Fibonacci. Not quite, but that's not what I want to look. The 618 would take us down. This is hard to read because of these order blocks. I don't see really this is that relevant, and we will look at that later. The fibs can be hit or miss, and we might want to zoom out on a longer time frame to see where that likely would come into play. So I'll just hide these for now. I'll hide the order block detector and the Bollinger Bands. So let's see. Let's try to get an idea and on this Fibonacci, where could this thing go? I'm going to draw it from the candle body up to the top. So based on this, 50% retracement would take down 107 and potentially down to $84. And I'd also be watching that 50-day EMA. I don't know. That's a bit of a guess. I'm not feeling terribly confident in that at this point. So what I would be more confident in is keeping the Bollinger Band Pro and our ERI Pro on that. Now, one thing in that we really love about this ERI Pro are these order blocks. So the difference between the kind of pastel green colors, these are actual buy orders. Big buy orders came in on the weekly time frame. So when we see those, we saw it back here, big buy block, and we saw 3 of them a couple weeks almost in a row, which pushed prices much higher in Solana. Certainly what we don't want to see is a big red sell block where actual sell orders came in, and so that's more money flow, whereas these other colored blocks are basically sell orders and buy orders, if that makes sense. All right, everyone with me? And I'll pull up the chat, by the way, and I'll just kind of chime in on that here, and then we'll get to some news. But I wanted to cover the bases, you guys, and let you know what I'm seeing. I do want to, let's look at the total market cap also. I might have, no, I don't. I thought I had that already open. But let's see, where did that chart go? Bitcoin total market cap is in here somewhere, and right here. Okay, so total market cap, as I've been saying, looking bearish. Coming down here, we could certainly come down and retest 2 trillion. There's a lot of buy orders down in 1.8 and 1.7 trillion. As long as we're in this downtrending channel, everybody, that is the trend is your friend until it isn't. Really, what we want to see is that trend channel break out to the upside. And obviously, we can see there's still a lot of sell pressure up in that $3 trillion range. And actually, that has disappeared. There was quite a bit of sell pressure at 3 trillion. They've now lowered that. And so as we can see, that prior cycle high, we saw it push right up into the 2.7 trillion region and then sold off. And it's a very strong sell area. So, it's not looking to me we hit new highs here anytime soon. Unfortunately, thought we would see a massive push higher and going into May and the summer. But the total market cap is what leads the markets. It's not Bitcoin. Bitcoin is part of the total market cap. So at this point, we could be looking at this kind of a scenario on the daily time frame, possibly sooner. These things generally would happen a bit quicker. So if I draw this out, I'm not drawing this for time frame necessarily, other than how we could see this break above that very important $3 trillion mark. But that could put us into June. So, this is a scenario we have to be open to. Slow bleed into this downward buy zone and then breaking back out above the new highs by June. So it just pushes us back a month. And I think that recovery, however, could start happening late May. So this is my base case scenario that I would see having play out right now. Bearish on our TSI, also on the total market cap. And so look, we have some work to do. This is not a bullish setup in any means, and I would not be going long on just about anything. There are 1 or 2 opportunities that we'll be sharing in our M3 Active Trader class. So if you're watching on YouTube and you want to find out more about what we do, you can go over to moonstream.io. And if you like this class, we have a deeper dive, a little bit more detail on Wednesdays. That's tomorrow at noon. And you can find out more at moonstream.io/M3. For my Moonstream class, the M3 class, where you get the indicators for free included. And we do daily chats in a private Signal group. You can read about what that looks like, some of the chat. Great group of traders in M3, so I invite you to join us there. Very affordable considering what you get out of it. Private chat, a weekly class every Wednesday at noon, as I said, where you can ask any questions as you can here. But we go a lot deeper, and also a membership area with lots of resources and high probability chart setups, interactive PDFs like our portfolio tracker, our DCA, which stands for dollar cost averaging, trading template. That has been huge in what we work with private clients in when I work one-on-one with people. That's the same sheet that I use to talk about ideal portfolios for the bull run. And so you can see some of the bonuses here. I won't spend too much time on it. We have something for everybody, so do reach out if you would like some guidance in this bull run. It is tricky business, everybody. I won't lie to you, and everyone knows that. Picture of me, I do actually trade on a regular basis, and of course our indicators, which have been really paramount in our trading success at these key inflection points. All right, so I do not think we've seen a market top for this cycle at all, but I think we're seeing certainly one of the bull market corrections. And so anyway, please go read through that. You can read lots of comments from users. We haven't updated this in a while because we have so many, and some other bonuses in here, including a one-on-one session with me. Normally a $1,000 value if you'd like to talk about anything. That's in the M3. And there's some pictures of our students with some hats on. So anyway, you can learn more about that. Again, over at our website, moonstream.io. And if I want to pull that up here, it's not what I want to show you, but you guys can figure it out. But there's also some free resources. And I'll just pull that up for you guys. So wherever you're watching from, we are streaming live on the YouTubes here today. And you guys, just to do that every now and then, let me move my camera over here, and I'll talk to you this here. So basically, moonstream.io, just go check it out. We just relaunched our newsletter as well and closed that this weekend. We have a few spots left where we do a market recap and a coin pick every month. My business partner, Mike, has had some amazing picks, including one of them that went up 6x since February. That's pulled back. It's pulled back quite a bit. Those of you who know what this is, I've started to buy more of that because I think it runs another 100% here in the short term. So that would be worth signing up for that. And you can get more here at clicking on this one, because you can see all the past newsletters. And a lot of these coins, they have a big run and they come back down and then they have a big run again. So just saying, Crypto Mastery we talked about, my Moonstream M3, we have a Retire Rich class and some one-on-one work that I do. But more importantly, or equally as importantly, if you're new, go get some of our free newsletters resources here, or sign up for our Monday newsletter or these classes if you want to join live in the weekly time frame. We don't stream. I don't know if this is still working here.
Recording in progress.
Oh, right. I think we lost ourselves here for a minute. And okay. Okay, sorry about that, everybody. We lost you there for a moment, and I had to get back on my microphone. I don't know if we're still streaming, so let me just check that here. Looks like we are. It looks like we had an internet glitch. The internet gremlins got us. Sorry about that. Let me just check the chat, everybody, and you can see me now. Great, thank you, everyone. Yeah, I just upgraded to the gigabit Wi-Fi, and it's a little glitchy, this internet stuff. So as I was saying on the checklist, this is how we use, and you can use, whether you remember with us yet or not. You guys can use this checklist to help gauge your trades. When you check off any of these boxes here, whether it's using our indicators or standard ones like some of these patterns, it'll give you a trade success score, and the higher the score, better the trade opportunity. And right now, if we were looking for bullish trades, I would imagine we're not going to have a very good score, whereas recently we were seeing scores in the 2, 3, 4, and 5 regions on those nice little bounces. So anyway, let me come back to this. We'll pull up some coins this is primarily a training class for people evaluating the Crypto Mastery indicators that you can find at that cryptomastery.org price point, website. And you can see some examples here of some of the wins that it helped us pick. Okay, so you can do that on your own time, but do that. Definitely, I would say if you're in these markets, you're at a huge disadvantage if you don't have these. They are the simplest yet most powerful indicators I've ever used. So anyway, let's come back into this. Let's jump into some news, everybody. Before I do that, I'm going to pull up the chat. And let's see, there's a link there. And questions, Perry says, what price do we need Bitcoin to stay above to not be engulfing for the month? Good question. Yeah, we sort of touched on that. And where'd that chart go? I think the monthly's over here. I'll just slide it over this way. So, so basically a bearish engulfing candle, as the name would imply, is the candle opens right around or is higher, and then the previous month, it looks pretty close. It is close enough. Sometimes Steve Nissen, I'll be on with him, and he'll be like, no, it doesn't qualify. It just barely. It's close enough, all right? And the fact that it's engulfing and it's closing below the open of last month, that's why it's a dangerous candle for us. It indicates further selling pressure and downside. Where would it need to close? Technically, we would need it to be above 62,000. In this region. I mean, if it were really close and it was just a little bit under, I'd still say we go lower, you guys. Ideally, we'd want to see it up about the midpoint where it was over the weekend. And if you were with me last week, I was saying, hey, this doesn't look so bad, guys. I was saying if we close here, we've got our red candle and we should push higher from there. But let's come back to reality for a minute. When we see price get this far above trend line and also from the moving averages, so we have the 50-month all the way down here, the 21-month was down here, but when you see these get extended and that far above, especially when it's this far above and you get that ladder effect, it's way overbought and it needs to come down because all of this is speculative mania. We have to remind ourselves, this is not orderly, friendly, buying fundamentals. Certainly we're buying the narrative of the future of blockchain. But This will come back. It will correct. Do not be holding on to things when we have the signs. And right now we're having the signs that we could pull down in this market a bit further. And how much further? Let's take a look at that. And I'll just draw it over here. So if we were to come down another 30%, I think this 52K number to me is more likely than not. And by the way, you know how we always talk about the midpoint of these vector candles, and don't ask me why. I'm going to be explaining this soon in M3 Trader. And it's a little bit complex, but I was digging into it a bit, and I have an answer. It's just, might be some good way to kill some time while we're waiting out this bear cycle. But typically and often over the years, I've noticed these big candles, some people call them vector candles, essentially when the market or the market makers are pushing into a new price range, they'll just move it there. They'll just say, all right, let's go there. That's where we think this is worth. But often, very often, it comes back to retest that midpoint, at which point this is around 51, let's say 50K to 52K. So at this point, I think we do see another 30% pullback down in this range. I'm just reading the charts, you guys, and it's not what I want to be saying. I wish we could be saying, hey, guys, we're looking good. It's time to go higher. But at this point, I will say you should be considering. And I'm not going to give financial advice, but I'm giving a group presentation. And for educational purposes, I would suggest it's better to be in cash, in some cash, to buy later, and wait for it. Be patient. Let the market come to you, right? So anyway, just looking at some of these other examples to finish that point off, as we talked about midpoint of these vector candles, and see that you guys, this vector candle back in here, the market cycle bottom came down and held exactly at that 16.5 level. You guys were wondering how I called 16.5 publicly back in May. Back in April, May, right in this range, when Dylan LeClaire, the editor of Bitcoin Magazine, in a whale session at Bitcoin 2022 was saying we won't go below 30. I was suggesting below 20, and my number was 16.5. I called that publicly in this range as well. And because, look at that, the vector candle came right to the midpoint, right in this range. So we also sort of saw that same thing here. We can sometimes see it 2 days in a row. But typically it's the first or biggest one. It's a bit hard to, when you see two in a row, it's less likely. Okay, so there are some nuances to this. Okay, let me get rid of this one here. But we see these often, and on the flip side, we do more of this training in our M3 trading class, by the way. And now this vector candle to the downside retested here. It came back right up and retested that. So it's kind of like the CME filling the gap. Okay, so, and then we had another one that filled. Once you start to see them, you see them everywhere. Is that right? It's right in here. Refill that one, and I'll draw it down more closer to the midpoint for you. Yeah, I'm going to have to call these TradingView guys. They've changed this functionality. It's irritating. Right there, so came down, exactly touched the midpoint, pushed higher. So you see, so that's the thing. I think more than likely we could see 51K, maybe dip wick down below it. And down, it would be a good thing to come back and retest this lower trend line as well, just to be honest. So this is now our new region. And so if you're fully in the market and you sort of have your head in the sand thinking, I don't know, I'm not sure what to do, it's good to, in my private clients, we've been talking about this. I've been sending out private videos. And you guys, they've been saying, all right, I took your advice and I've taken some money out of the market to hold on. And they're glad they did, because the markets are down big today. So just ask yourself, are you okay to ride this down to 50, another 30%? Long term, we'll be fine. But wouldn't you rather have, take smaller losses, to have that cash, wait for the bullish signals? And in this case, our crypto mastery signals are excellent at catching the turnarounds and catching the inflection points, so that you can dollar cost average and lower your total purchase price to get back to break even faster. Okay, so hopefully that answers your question, Perry. Let's see. Saying maybe crypto's following the saying a bit early, sell in May and go away. That's a stock market saying. It's true that crypto hasn't always done well, or usually hasn't done well in May, but we also can go back in history on the bigger bull runs, and once we get a red candle, the bull resumes, though. There's that. So when in doubt, zoom out. Now here's the thing. We did have a bearish engulfing monthly candle back here that then continued higher. The reason I'm not inclined to believe that is this one had other signals. It had this lower wick right there. You see the lower wick, meaning the bulls were not ready to give in. And so when you see a full candle that's engulfing all of it like this one, that's more bearish. We did not see a big wick to the downside, and so we'll see what happens toward the end of today, the last day of the trading month in crypto. But typically, that's why I was hoping to see one of these red candles. Because in the last bull runs, we've seen 6 candles, 1, 2, 3, 4, 5, 6, and that was the market top. We've seen 1, 2, 3, 4, 5 red candle, then really pumped up higher. So we just want to be watching for these things. And here's a big bearish engulfing candle in the monthly. And it went down the next 2 months until we got this nice doji. So anyway, I think I've made the point, you guys. Let's see, and sell in May and go away. I mean, I don't know if we'll go away. That's an old Wall Street saying, sell in May, go away. All the big traders, they go out to the Hamptons, kick back, have some margaritas every day, and they don't trade. The money, the volume goes down in the summer, and that all comes back. They come back nice and relaxed from their houses in the Hamptons, come back in September, and it's bad business as usual. Volume picks up, and things start moving. So I certainly think I think we are pushing new highs by September, October, November. I do believe that. And maybe even 100K. So, but we have to watch what we can see, and this is a footprint. This is a sign that we head lower from here, everybody. We'll unpack this a little deeper tomorrow's class, and those of you in the M3 Active Trader, of course, and some coin picks. And, maybe we're talking about maybe doing some shorting, not with margin, not with a lot of margin. Don't recommend that, but M3 traders are, some of you guys are ready for that, I think. We'll have to see. All right, questions. Is the overall macro liquidity DXY influencing this crypto? Yeah, we cover the DXY tomorrow, Perry. So you're an M3, I believe. We'll talk about liquidity cycles and the DXY, and that's a good signal as well. And let's see, you guys lost some internet. Okay, caught up on that. Let's jump over to some news here. Try to keep these short. Some news here on the. So this is something that Mike, my business partner, released recently, and talks about why the SEC shouldn't classify ETH as a security. Part of the reason we're selling off is that narrative or story that the ETH ETF was next and was the next trade is not likely to happen now. And guys, look, I'm going to give credit where credit is due. I was saying this a year ago, hey, what's to stop the SEC? Not to be trying to brag or anything, but I was saying, what's to stop the SEC from saying now that ETH is no longer proof of work since they switched to proof of stake, what's to stop the SEC from coming back and revoking their get out of jail free card, essentially, because a year ago, Old Man Gensler said, hey, you know what? Bitcoin, Ethereum, not securities. But then they went and changed the mechanism of how it's created, right? So this is exactly what this is. The SEC saying, forget the article for a minute, but basically suggesting that ETF won't happen. And there's other signals that it's not in the works. They're not asking questions. They're not inquiring. So probably that'll happen later. It will happen, I believe. It'll happen later. And, the BlackRock basically said, Larry Fink said, hey, I'm not worried about SEC. We'll make it happen anyway. So I don't know, you guys. It's crypto. Anything could happen. Anyway, so, and I saw GBTC has filed for an ETH ETF or an ETH trust. So maybe they'll follow the same thing they did last time. First mover advantage, the ETH trust, and then they'll get a bunch of money in, and then they'll flip it over and they'll sue the SEC and win. And then who knows? So why the SEC should not classify ETH as a security? Let's look at this. The report suggests the agency may be about to categorize ETH as a security, as I was saying, with huge implications for the big blockchain's future. How many of you guys remember me saying that last year? A couple of occasions, and I was like, I wonder why no one's saying this. Because it makes perfect sense. You guys are a security now that you're no longer proof of work. It makes perfect sense. Although the next battle is the CFTC. The CFTC is saying, oh, no, it's fine. It's a commodity. Big question is, will we see a new regulatory body in the next, by 2030? We have a new regulatory body maybe that isn't SEC or the Commodities Futures Trade Commission, whatever. So, that would be huge. It's a milestone for crypto. So, but for now, this is going to be a battle, and here's why the SEC could be wrong. So it's worth unpacking this a little bit. What do you guys think? I mean, the SEC is not rolling over easily, that's for sure. So they're suggesting that the SEC preparing to classify ETH. This could certainly be spooking the market. If they come out and say, and it would wind up in lawsuits, but if they came out and said ETH is a security, that's not good for ETH. They would see a big sell off on that, and so I don't know. We'll go back to that ETH chart. We'll cover it in more detail tomorrow. But I mean, ETH and Solana are my biggest holdings in my IRA. So I may look to move some over to Solana on that. Solana's weathered some storms and is not in the crosshairs at the moment. And it's saying the move would undoubtedly have severe repercussions for the entire crypto industry, including derailing plans for the spot ETF for ETH. So, guys, I will stop and just say to you that, I know there's a lot of varying levels of what your holdings are. And just take a few moments today and soon and just say, am I okay to ride this out? Or like a 30, potentially 50% retracement. I don't think so, but let's say we see another 30% on Bitcoin, and that alts could be more, maybe 50% or more. We've already seen many alts down 50%. So if you're fully invested, and this is going to be really uncomfortable for you if we go lower, I would consider start taking some losses. Not your tax advisor. There's long-term capital gains and things like that. But this is not the time to be coming into the market. The time to be coming in was last January or on this next pullback. Okay. And I was a little bit premature. I thought we had seen the pullback. But at this point, the new information equals new decision. This red candle signifies to me we come down at least to 52K, maybe down to 48K in this region. More than likely that 52K holds at that midpoint of the macro vector candle. Okay. Does it have to stop there? It doesn't. Now, it also could wick down here and come back up in May. That is a more likely scenario. We sell off. We have a capitulation sell-off down to the 48K region. And then we come up and close on 52K, maybe this next month. I have it drawn out in the future, but it really would be more like this. Okay. I can't. It's not letting me do it exactly because it's the scaling. But anyway, my point of that is it's better to sell and take partial losses most times, and unless you're trying to take losses later on for tax reasons. But for the most part, as a trader, I'd rather take some losses and avoid this deeper drawdown. Let's say you sold a third, or 25%, a third, a half, whatever, and then you prepared and planned to buy back down lower. Okay, once we started to see those buy blocks coming in and some of our signals going green. But right now, my radar, which I'll get out of the way here for a second. Wait a minute. You guys can't see the news. What's going on here? I'm sorry. I'm on the wrong chart. I moved over so we can look at the charts here, but that's what we're looking at here with, looks like, kind of like Abe Lincoln there with Vitalik. But this is what we were talking about, you guys. Sorry if you guys couldn't see that. But anyway, that's the deal. So that's what I'd be preparing for to kind of buy back in here lower. And the radar, which I know I've got a bunch of tech here I've got to move around. But I want to make sure you understand what I'm talking about. The radar over to my right, let's see, is that this way? Over there in the corner, that radar, everything's reversed. This is bearish, near term, daily, weekly, monthly bearish, quarterly bullish, but that still signifies going lower. Okay. Any questions, you guys? I'm going to pull up the chat, make sure I have that. Yeah, sorry about that, Susie. Apologies. Yeah, there's a lot going on here. It's a one-man show, everyone. I'm a one-man band. I mean, Myrene is certainly here to support us, but I've got a bunch of tech here, and hopefully you guys can see all this. So what I'll do is I'll hop back over to the other side of the screen, hopefully. What happened here? I'm not going to keep doing this to you guys here. I just wanted to make sure you knew the radar was. Okay, cool. I can see it. You can see it. Good to go. Cool. All right. So basically, this is that ETH chart about what might be happening, and I wonder if they try to make him like Abe Lincoln there. I'm not sure. But here's what we were talking about: reporting CoinDesk, Fortune magazine reporting U.S. Securities SEC preparing to classify ETH as native token, and that's the other thing, everybody. This could happen, and it's sort of seemingly imminent, or it could happen at any time. And understand that we are up against trade algorithms. You're not going to have time to catch this sell-off in most cases. These things are triggered by momentum, the bots, and a lot of these they just trade and they have a whole entire basket. They'll just sell all of them together. You don't stand a chance. So there's reasons to be nimble here and not be fully invested. Those of you in M3 know this, and we'll talk about it in more detail. And I'm saying this because many of you are here. What I may do is I'm gonna set a Google alert for ETH ETF or ETH security. So if there's any news, it'll be in my inbox right away, and I'll alert you guys. But and then there's a video here. So you can go look at it in your own time. I have a lot of news to cover. How are we doing on time? We're coming up on the hour, so I'm going to keep going. So, citing several sources, that sounds ominous. Fortune reported that the SEC has subpoenaed. My highlighter's not working, you guys. I'm sorry. Try that one more time. Has subpoenaed U.S. companies for documents related to their dealings. It has completely buggered now. Why is it doing that? Sorry, guys. Launch Eponymous blockchain based on Switzerland Ethereum Foundation. Apparently, the probe started to emerge. Okay, so they have been probing them, and they've been subpoenaed several U.S. companies for documents related to their dealings with Ethereum Foundation. And Ethereum Foundation is sort of the owners, or the managers, not the owners. All right. What happens if ETH is a security? Well, it's going to be bad. Prices will be dropped in the near term. Again, as I was saying, the proof of stake upgrade, SEC Gary Gensler said the proof of stake claims which pay users for locking up their coins as a security model resemble investment contracts and could be classified as securities, though he did not mention ETH by name. All right. Well, that was wasn't big news. It kind of was under the radar, but that's why, look, it's important as a trader investor when you start to sort of connect the dots yourselves versus waiting for the news, because you need to know what news to listen to, and kind of keep in the back of your mind, and what news to kind of ignore and say, like, well, this is clickbait, or they're trying to pump the price, or the media outlets, or whatever. 80% of media is placed, so you have to kind of have that contrarian view and just always be aware of this. Okay, so let's see. He has, however, launched lawsuits against Coinbase, Kraken, and Binance, so we know that, and on the grounds that they were selling securities. Now, there's no resolution to this, and this includes Cardano and Solana. So somebody was asking me last night when I was down in Florida, what did I think about Cardano? And it's I don't think much of that from a charting or a trending or trading point of view. It's a slow-moving battleship, and they just don't seem, the narrative's not there. Solana is, but these are all sort of potentially in the radar here, and so I don't know, you guys. Tricky times. Everything is 2020 in hindsight, but it's always very difficult in the moment. That's why we have our signals and why I use those to sort of temper and cut through the news itself. Because show me the charts, I'll show you the news. Tell me the news, I'll show you the charts. Wait, how does it go? Show me the charts, I'll tell you the news. Got it backwards there. Been a long weekend. ETH has never been named a security outright yet. But Attorney General, they're trying to get on a stranglehold on all this. And to be honest, probably a lot of this is encouraged by Larry Fink and BlackRock. Why? They don't want you to go out and buy Ethereum. No, they want to have the Ethereum ETF, which will be regulated by them, and they want you to come buy the ETH ETF and the other derivatives that'll come later. Why? Because that's how they make their money. BlackRock doesn't make money if you go buy Bitcoin or Ethereum. Coinbase and the exchanges do, but BlackRock doesn't. So that's why, they've got the big swinging, in the room. They've got $10 trillion dollars plus to put into this, they for sure have some influence. So we have to see that plays out. All right, so both Ethereum Foundation, Cardano, not going to get into that too much. It's proof of work, etc. Unlike Bitcoin, hands down commodity. Let's see. Indeed, unlike Bitcoin, the only crypto that is hands down a commodity under U.S. law. So that's why they're the safest one. They get a pass. And so it's saying ETH founding team are still highly active. And Vitalik Buterin. You guys know my Vitalik joke? What do you call Vitalik Buterin standing at an angle? Italic Buterin. Yes, terrible joke there. Okay. Despite, I always laugh at that one. Despite announcing soft retirement on his 30th regular Institute of Ethereum tools, influence network roadmap, Joseph Lubin oversees the influential Ethereum, blah, blah, blah. Okay. Okay, so let's keep moving on. The case against classification. This is what I want to read, the TLDR. That said, not everyone agrees ETH is a security. They'll for sure fight it. And I remember seeing Brad Garlinghouse of XRP saying, no, it's not a security. But, I mean, Brad has his own battles. So let's see. CFTC, though, the SEC's smaller sister, has for years allowed ETH futures trading, right? So that it's also a commodity. So this is not an easy decision here. And CFTC, in the lawsuits again, ETH commodity, let's see. Commodity agencies outright said ETH is commodity, and that's a little bit unclear. But surely the SEC's unilateral determination that ETH as a security would have severe repercussions for businesses and investors that already interact and rely on Ethereum. You know, I'm going to ask somebody I know that has a lot of Ethereum, and for sure is getting some good intel on that. He's been chatting with this individual. He was buying ETH early on through his car dealerships, and let's just say it's panned out fairly well for him. Just built a $35 million house, and I won't reveal where, but anyway, for sure, he's going to know more about this. I'll ask him about it for us. Well, maybe in M3 if I hear back. So let's see. I'm going to skim the rest of this. So the best argument ETH is not a security is that it hasn't up to been now, and changing status would have harsh impact. But then again, it changed from proof of work to proof of stake. So that's the whole, you can't just arbitrarily change your mind, but ETH changed their mind. I mean, that's on how they were going to. So yeah, I don't know. That's a tricky one. No idea. CFTC had a policy A16Z, which is a big VC firm, echoed this point on X, saying that when SEC approved ETH futures, this is interesting. Yeah, when they approved ETH ETF futures, that basically it said it was not regulated. So it's explicitly acknowledged status of underlying ETH that being a non-security and outside of its jurisdiction. So that's a TLDR. CFTC is going to say no, you can't call it a security. You already approved the futures trading on the CFTC, and that trades on the CME. These are regulated bodies. They are supervised, ergo not securities, or are regulated. I don't know. We'll have to see. That's a big question mark, and nobody knows. So that would certainly implode market prices temporarily. All right. So I think that's about all we want to get into. Yeah, the SEC is getting too far over its skis, relating on the Howey test, which basically broad definition of security. Consequently, it gives the SEC very broad regulatory authority, he said, and investment contracts. Skimming some other news down below. All right. Okay, guys. Any comments on that? Let's see. If the overall market goes bear, does that mean that the pump and dump start up again? Doesn't mean that. The market makers have to make their money somehow. Well, they do that at key inflection points where, they see all the liquidity zones and they see all the degenerate longs going full 100x, and then they'll long and then they'll short it, and then they'll wipe out the shorts by pushing prices higher. That's the game at those key inflection points, like at the old all-time highs. It's very dangerous, come out where there was this trader. Some of you know who this is. I won't name him publicly. I have before, but he's pretty well known. He came out sort of mockingly he's like, well, I'm adding to my short here. I hope I don't get wrecked. So he got wrecked. It was around that 70,000. He kept adding to his short from 65K up to 70K, and pretty sure he got liquidated, depending on the level of margin. But it was just that point. You don't want to get too cocky on these things. Always be ready for the unexpected. All right, the shift or the merge. We talked about this is an old article, the Ethereum merge. This is back from April 9th. Let's see, shift to proof of stake was the most updated April 9th. Well, I mean, we've already talked about this, you guys. History of Ethereum merge. It's already been done, and we don't need to talk about that. Okay, let's keep going. And what happens if ETH is a security? The recent lawsuit filed by the New York Attorney General. They like to soothe people up there. It sounds like how far-reaching implications. ETH, the native currency of the Ethereum blockchain, and so investment security, basically dissimilar from interest paid out bonds. So we've got lawsuit filed against Seychelles. And by the way, here I'm just gonna turn on my ad blocker. Why don't I do that? Okay, so case for ETH as a security. Sometimes it makes me turn the ad blocker off, so hopefully I won't do that. And cool. And New York Attorney General asked for assertion that on suit that either may be a security is far from final. I think we're going in the weeds here. We don't know. Gensler has hinted previously that's exactly. So Gensler hinted previously ETH switched to proof of stake brings it closer in alignment with the agency's definition of a security. So basically, at any point, he could decide to do that. And again, the Howey test, as they call it, says a security is a contract, transaction, or scheme whereby a person invests his money in a common enterprise and is led to expect profit solely from the efforts on the promoter or third party. And the reason that DEXs get away from that is it's not a common enterprise. It's decentralized. That's why we may see a bigger shift toward these decentralized exchanges, and so DYDX, Uniswap, MetaMask, etc., because they can't go after them. At least they haven't figured out a way to make that case. So, so I think we've covered that. But the proof of stake, by this logic, might bring Ether closer to a security because its interest payouts require little work and rhyme with the Howey's test expectation of profits. And the interest payouts, I guess, is the key word there. Okay. It's not a foregone conclusion. A foregone conclusion. Okay, well, I don't know who said this, some person, I can't pronounce their name. It says, it's not, however, a foregone conclusion that the SEC will seek to classify ETH as security. From a practical standpoint, I think it's very unlikely the SEC is going to declare the current offer and sale of ETH to involve unregistered securities. So from a practical standpoint, well, I don't know, why not? Because it says, because the impact of doing so would be devastating to a large number of American investors. They don't care. SEC doesn't care. And who pulls the strings there? Biden and team eventually. And look, I mean, when does the CBDC start getting pushed out? We've got some really bumpy roads ahead, I think, in this next bear market with the CBDCs. If they start pushing those, let's see, and the amount of resources necessary to properly enforce that declaration, so would be far beyond what the SEC is probably willing to allocate. Probably, but who knows? I don't know. We'll have to keep an eye on it. Impact on the industry. Should ETH be classified as security by courts, exchanges wishing least? So already registered. Now question. Belton also pointed out, James, is that Letitia James, the probably the New York AG? Yeah, trying to make a name for herself. Kind of saying, by the way, you guys are beyond Ether. Based on the network switch proof of stake raises questions about whether tokens may be classified as securities. And wow, this is not good. What the NYAG is saying can expand way beyond just Ether and implicate the rest of the ecosystem. I don't know, you guys. I don't know. This is not positive thing. Not necessarily not positive at all, is it? We have to wait and see. Bitcoin sub 60K levels focus in focus after daily crypto liquidations, nearly 300 million. And when was that? Yeah, the 300 million was today. We already talked about that over here. 300 million 24-hour rec and liquidations right down here above my shoulder. So yeah, so basically sub 60K Bitcoin, is that on the table? Well, I think it could be. We talked about that, and let's skim this down here and just see. But there's a lot of buy pressure down around 50K in that range. Bitcoin price suddenly retargets 60K and precipitous drop. Now, you're going to see panic selling. What causes that? Stop losses get hit, then accounts get liquidated, drops it further. If there's no buyers, it can drop quickly. Those are the worst times to sell, by the way, because you're getting market filled at the bottom, and then it'll run out of sellers, and generally it'll bounce back up. So if you're new to all this, generally it's best to wait out for the bounce end of day and then typically get a little bounce and then consider selling some for losses. But you rarely want to panic sell because you can really get filled at the worst possible price. So anyway, this is Bitcoin USD losing the 61K support. Liquidations, as we talked about. Here's the visually. We saw it. We looked at that already on a different site. And already cautious mood turned firmly bearish. Well, hopefully we get back into the fear cycle, and hopefully we should be down in that fear zone. We'll look at that tomorrow. How are we doing on time? We're going to kind of wrap up here in 15 minutes. Leave one coin, time for one coin. So let me speed things up. New products managed 12.4 billion. It's East versus West. There's what else here? Hong Kong spot, Bitcoin, ETH. So they didn't do tremendously well. 12 million. In total spot Bitcoin ETF we had total spot Bitcoin and ETH. So total 12 million, not a lot, you guys. Very, unless these are in thousands, 12 billion. But no, it was only 12 million, it looks like. So that's why it was kind of sad. The market sold off thinking, hey, this is not much. So, why? Where's the money? Where's the beef? So the Asian market's not ready to put money into this market here. Bitcoin ETF flows. We can look at that over at our own version that we like to use over here at Hey Apollo. I don't know. They haven't seemed to be updating this as far as outflows. If we go to IBIT and FBTC, the AUM, we're still right around 28 million. We're not seeing this updated. I don't think. I haven't seen a lot of outflows on that. So we'll see. I think we have another article to talk about there. Concern over Bitcoin futures shorting. That would be, the future shorting. They can definitely drive prices down. The derivatives markets, considering where Bitcoin prices and the weaknesses may reverse, participants eyed both 60K and the ground immediately below. Let's see. I want to talk about that. 50-day EMA as potential support. Well, the 60K level seems like robust bottom for the current consolidation range. Somebody says, and Glassnode, blah, 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 market favoring buy the dip approach. Bullish sentiment persists with the market favoring. However, a breach of 60K support lead to further stability at 52K level, as I said, and I showed you guys, so 52K. Historically attracting buyers and reinforcing the uptrend. So we may be seeing that, but I also still think there's going to be front running to get ahead of that 52K. I don't know. I won't be buying until I start seeing the green signals. So at any rate, nearest support level 58K. After all these, that's just too much. We're going in the weeds here. Let's keep going. Bitcoin price red alert. 7-month green streak ends. How bad is it? Already looked at that. Looked at that on the charts, of course. And here, so that's what this refers to, obviously. And let's see if there's anything new in here we need to look at. Probably not, but let's see. Months of rallying and predominantly trading the green zone, Bitcoin faces a new sobering reality with the maiden cryptocurrency poised to close April with losses. But that's actually a good thing. We just need to see how deeply it comes down, and the deeper the bounce, the deeper, the deeper the dip, the bigger the bounce is going to be. So just remember that. Reviewing the asset price, crypto trading expert so-and-so suggested blah, blah, blah. 1 month decline should not cause alarm. Notably, we've already covered all this. Expert, historically brief decline. Look, impact of having Bitcoin price analysis. We covered all this. BlackRock's Bitcoin ETF daily inflow on hold for 4 days. We mentioned that, so we'll talk about this for a moment here. While some crypto observers are concerned about IBIT's inflow halt, others say it's more normal than the 71-day inflow streak it recorded. We do watch the IBIT on the 4-hour chart. We'll look at that tomorrow. and the M3 trader class. And by the way, again, if you haven't, make sure to go and check that out if you're not already in M3. Many of our members here are in M3, and we drop alpha every day there that you guys can make money from, and at least navigate these markets with a lot more confidence. And you can always ask questions in the chat. We've got daily chat. You have me 24/7, so you can always jump in there and ask questions. And the other members of the community very good at answering questions too, and dropping good news articles and alpha there. Okay, so the Bitcoin community increasingly concerned about BlackRock's spot Bitcoin ETF exchange traded fund. This is a mouthful. Always not easy. It's not easy reading, you guys. Halting inflows for several consecutive days. Look, it's no surprise there. Show me the chart. It's consolidating. Buyers are on the side. They're going to wait till a pullback. They're not dummies. So, has not recorded inflows since April 24th. We see that. We're also not seeing any outflows. I don't know they're reporting those, but let's see. Concerns inflow halt. This is probably more and more to the same. And yeah, so here's that Hong Kong tough debut. We'll skim that real quick. And we don't need to go in too far in the weeds on these, as I said. All right, let's jump over to this Hong Kong Bitcoin Ether ETFs, tough debut, first day of trading. I want to find out why that is, because if there's some reason behind that they're still raising the money, that they're trying to get the money over to buy, most likely they're just waiting. Yeah, so we were right. So the Hong Kong hit 12 million trading volume, as I was showing you. That's nothing. That's nothing, you guys. Spot Bitcoin Ether ETFs finally Hong Kong market. The trading volume suggests launch. So, this is going to, but here's the thing. The bullish thing is over time, these will be good. There'll be more money coming in, and we just have to use our indicators to time this as best we can. And let's see, the HKEX previously highlighted investor interest in its cryptocurrency futures ETFs, which it's had for a while. So basically the spot one's less interesting right now. Okay. Let's keep going. Promising Ether tokens to invest. These are generally okay. I will look over these for ideas, but these are often advertorials. This is on something called Finbold. A lot of times, these are advertisers, or the owner of the site is getting paid for, recommending things. So let's see. But I do like Lido Finance. We've traded that before. It did sell off quite a bit with the rest of this markets here, but it's going to be great on these next dips. So we got Lido. They've got a million validators. That's huge. So lots of adoption there. They dominate the liquid staking market with total value locked over 29.9, call it 30 billion, obviously. So, Uniswap, I don't know. Uniswap is just, the chart looks like merde in French. So it looks not very good. I'll keep an eye on it, but that's the only two in the article. That's pointless. All right, this is not the best source for us. This is back to Cointelegraph. Crypto investment funds see 435 million of outflows. Yeah, they're not really reporting that. It doesn't look like, well, maybe on that Hey Apollo site. I guess that's not a huge amount. It's mostly in billions. So, we're seeing that. I'm not sure how that works, if that's people pulling and redeeming that, or if it's the actual exchange, or the IBIT doing that. So third outflows for the third consecutive week. Yeah, so look, what goes down must go up. And let's see, the most of the selling is Bitcoin, Ethereum. It's hard to read this year to date. Assets under management. Is this BlackRock, CoinShares? Doesn't matter. We're getting in the weeds on that as well. Bitcoin bull run experiencing a short-term pause. It's always good to sort of get a narrative. What are most people saying? And then maybe do the opposite, because they're usually wrong. But at this point, we don't expect Bitcoin ETF will slow down to be a worrying trend. I believe it's a short-term pause before ETFs become more integrated with private bank platforms, wealth advisories, and even more brokerage platforms. That's kind of the thing, the needle in the haystack I was digging for, because the overall the trend is up. They are still raising money, getting all their legal stuff out of the way. So that's why I'm just leaning toward the dip being front run. On the charts, 52K looks very plausible. But will they let it get down that low? We don't know yet. I'd be setting buy limit alerts though at 52K, 50K. See if you get filled. It could be a fast drop in a liquidation, capitulation bounce. So anyway, we'll see. Analysts emphasized 150,000 price target. I was saying that for months here. I have that cycle. You can always find me on TradingView to follow those. I update those fairly regularly. I have a scenario for 155,000 Bitcoin this cycle, and I also 250,000 Bitcoin during this cycle. I'm just wondering if we get that double peak. I wonder if that plays out, and that's when we do it. I'm not sure. We'll have to see as we go along. Another leg up for inflation would be bad news for risk on assets. So, definitely some clouds and some headwinds against us. The uncertain economic environment here, the interest rates not likely to drop anytime soon. Liquidity cycle is in question. They do have to drop rates at some point to pay for our spiraling debt and start injecting liquidity into the market. But oftentimes, when that happens is when we've broken the economy, and that really hurts things and things go down. So we just have to keep an eye on things. As this graph says, the financial conditions were the highest or the tightest as inflation was turning around. That was back in 2001. And the last, which is a bit too much to unpack here for this class. So I think that's about it, you guys. The only thing I wanted to share with you also, something called runes. If you haven't heard about these, 68. There's kind of it says in the red upgrade for Bitcoin. Now these are, I'm not sure if these are like NFTs. The runes launch was accompanied by massive hype. I never heard about it until now. Until around the potential of meme coins on. Oh yeah, these are. So I guess ordinals. I guess they're sort of like ordinals here. Fresh functionality for Bitcoin network to tap into growing interest in DeFi. Despite enthusiasm, Runes has received its fair share of criticism. It's just wanted to mention it to you in case you haven't heard about that. This is interesting, however. I like to skim the articles. This is measuring blockchain. TPS means transactions per second. That's what Solana really was famous for when it came out. They said we can do 50,000 transactions per second, or was it 500,000? It was 50,000, I believe. And then they had a DDoS attack, and it dropped price. Now they're processing in that range, the 50,000 range, but we have other companies like Cadena, we have Metis, and originally we had layer 2s like ZK Sync on Polygon, but, and I'll get back to the article, so it's interesting to read this because they have a new platform called Firedancer that is promising or proposing 500,000 to 1 million TPS. Now that would be huge. But this article is saying, does it matter? Is it stupid to process these things? Let's unpack that briefly because I think that's worth looking at. And so for years now, TPS, the go-to metric for blockchain developers, trying to hype up their snazzy new networks compared to Bitcoin's 7 transactions per maximum. Now, a lot of people are saying Bitcoin's not going to be used for transactions, but they already doing that through the Strike network and the Lightning network and what's it called, Taproot upgrades. So then Ripple came and said I could do 1,500 on par with Visa. So what? Solana saying that claims now they're saying 65,000 TPS as a benchmark, although they are closer to 3,000 in the real world. So, it's still early. And let's see, Lure blockchain networks tout up to 297,000. So let's just get to the point here. Real version, lies limitations. Early days, blah, blah, blah. Buy 2 pizzas. Let's see. What's the point? And whining TPS. These are lips. They're going to drag it out for us, aren't they? So I don't know, you guys. I'm not sure I want to stick through this. Flexing TPS is like saying rice is the best food because you eat 10,000 per meal. I guess they're saying you don't need that many TPS. Like, there's so what? If 5,000 per second, still a lot. That's more than Visa has. Now, Solana transaction inflator misunderstood. I don't know, you guys. She pumped up though. Let's see, what are the comments? The problem is not TPS per se. The problem is that any metric that becomes a target becomes useless. Yeah, that's kind of the thing. Goodhart's law. So let's leave it there. Perry says those it's TPS actually. TPS theoretical measurements versus real world sounds about as accurate as MPEG on vehicles, miles per gallon, not what was promised. Yeah, I would say keep an eye on Fire Dancer. That completely obliterates the others, but it's kind of like Wi-Fi though too, because you don't need gigabit Wi-Fi. That'll power like a small hotel or you could have 3 TVs streaming video on Netflix with on that. So I don't really need it. It doesn't matter. But here's Fire Dancer. This scale changes everything. We're building new validator client for Solana in order to create more permanent network. Follow us on Twitter. So this is in the wings, you guys. Managed by Solana Foundation. So this is game over, at least till the next one comes out. But they're saying 500,000 to 1 million is what their goal is. Okay, so with that, you guys, let's chat back over to the charts. And again, let me see, did I cover everything in here? Here's our Blockworks ETF tracker. And so the IBIT and the Fidelity, yeah, so they dropped a little bit, but not too much, 3.5% on par with GBTC. We've already talked about that. Let's look at the hot movers here, see if anything pops up. I didn't see anything earlier. I wouldn't be looking for buy opportunities here, actually, in this little dip and correction. Most of these are going to be pump and dumps. So I'd be very careful, especially on these lower market caps. Memes, cryptocurrencies, memes. Most of these are memes. So be very careful, you guys. Let's not talk about this. We can jump over to, let's see. What do we want to look at? Anybody have a coin that you want me to see and check out for you guys? And while you're doing that, I'll pull up some. We'll go to our old crypto mastery list, see if anything of interest jumps out at us. So, and see if there's any buys. Are we getting any good buy opportunities? So, some we've looked at in the past. I saw an alert on Pendle recently. Pendle had a big run up. It's breaking its support. No, nothing good to see there. All red on the radar. All of this looks bad. Anytime it's below its 21 and 50-day EMA, not looking strong. Bitcoin holding, at least Bitcoin has some support here in this dark green zone right around 30K. We talked about and down in 29 run that 3K level. Perry, yeah, I mean, those are the same as these. The crypto coins. TradingView has I like the TradingView version. Nothing against the Banter Boy guys. It's just those bubbles make me dizzy. And so anyway, and you can check for different sections and segments and industries. Use whatever you like. You can filter those down as much as you want to. So if you wanted to look at certain things, you can. And let's see. But, look, I think we've just about covered it here. What else can we talk about? I want to maybe do an example with our trade alert or the trade success checklist. But again, we don't want to be hunting for bullish opportunities necessarily if we're in a free-for-all. And unless we're dropping down into a buy zone. But I had J kind of finding some support on the buy zone, but the big thing is if our TSI is down in red, that is a -1 score. Our signal line is also red. On the bullish side, we want to go back here in time and say when they all align on the green side, that's a great time to be buying. I'll turn off the radar because we're going back in time to pretend. And because I'm covering it, but it's basically, do you see this here? So back in here was a great time to be buying these things. If I turn on our ERI, if you're new to us and you haven't seen these before, our early reversal indicator, especially on the weekly time frames, are super valuable and effective because right down here we say bullish ERI early reversal indicator, hence the name. I'll just move this over, followed by the TSI, the trend strength indicator going green. Started this little rally with the bullish buy blocks here. So that usually, to me on a weekly basis, that's very bullish. And I haven't seen any chart yet. I'm not saying this is definitive, but I'm hopeful. I haven't seen any chart yet on a weekly time frame where we breached a previous buy block on the ERI Pro. And so on these are great. Like INJ would be great to buy back at $10 because we had that buy block and the order block rather, or the order flow and the buy orders in here. So now is the time to be putting out your alerts for things and also maybe your limit buy orders. Look, at some of the best times to buy is to catch these capitulation bounces. I know it's a little scary, but this is how you do it. And our indicators will give you the most likely buy bounce zones. You can make not an income claim, but let's just say I've made 20-30% before putting in low buy orders and having it capitulate down, hit that buy order, and bounce back 20-30% same day. You can do very well on these push pullbacks if we're ready for it. So anyway, that's that one. Let's see. What do you think will lead the recovery back up? I mean, it's interesting. I was reading something this morning saying the alts might lead the recovery. I mean, Bitcoin's the safest play. The ETFs will go there, and I think ETF leads the recovery. But the alts will be just far right behind, just right now. However, I don't see any reason to be buying anything. At least we want to see our TSI and ERI turning green on these. And so if you guys would like, I see a lot of familiar names here, so I don't know if we need to go through, but I would like to do one. Let's see. Let me do this. Filecoin was looking interesting yesterday. It's sort of sold off here today. On a daily time frame, weekly looks bad. Had a big sell block up here. Further downside likely down in these regions. I love it when we see the TSI on the daily and weekly align like we saw back in January. When we see those align, we see very nice bounces on these. Okay, so basically there was a buy block here, at least on Coinbase yesterday, but it's sort of disappeared here. And yeah, not looking so good there. So at any rate, we would be, let's see. I want to give you guys a signal here. Also on this RSI, we're not seeing the green on the RSI yet. The radar on Filecoin, it's going to be all red, I would say, but let's see. All red on the radar, so probably on the monthly, well, probably all red on the quarterly also. Yeah, so what we'd be looking for are some buy zones on these, and if you don't, when in doubt, stay out. We were starting to see, now some of these have a little tighter buy blocks right below, like Say and Sui, who we were looking at. It's pronounced Sway, but it sounds too much like SA. Down in these regions, I would set buy alerts down in here. But bottom line is TSI turning red is not a bullish. Don't buy these. You want to wait for the cycles come down from the bottom, turning red to green. And that's why we created that trade success checklist for you guys, because in those environments, choosing that is the ERI up in green arrow, and then is the TSI green and above the 20 line down here. These two things gives you 2 out of 21 score. Typically, I'll go into a trade with that. I won't go in without it. And then when our signal line goes from red to green, also we give it a check. And right now we'll have 3 out of 21 trade success score. Pretty good. And then we have our trend indicator, all of this. We haven't played around with that. We typically train on in the market conditions. When a bell signal comes in, it's a bullish kind of a market, and the others are green. This is what we call our fourth horseman. So we have ERI, TSI, signal, right? So ERI, TSI, signal, and bell. Those 4 things, highly correlative. That's when we're adding to the position. And again, these are all built by a quant engineer and an excellent trader that trades professionally and builds automatic traders for institutions. And so this guy's really good, and these indicators are really good, and they're easy to use. So if you don't have these, make sure you go over to cryptomastery.org and get these. You can upgrade to the Pro Pack there. You can start with the basic ones for $99 a month, $97 a month to be exact. Should not be trading these markets without them. And of course, you can get those included for free in that M3 Active Trader program, which is at moonstream.io/M3. Check it out, you guys. We've got a great community there. We'd love to have you. So with that in mind, and there's nothing here that looks bullish. I'm just going to say that right now. I wouldn't be buying anything right now. And with the new RSI Pro, though, really interesting that we've seen it both. It also shows bearish divergences, bullish divergences, so we don't see anything there. And for obvious reasons. Now we had a bullish ERI, but it was invalidated by the TSI being red and down. So these things back each other up. Would not trade without these personally. All right, let's see. Filecoin will lead. Talked about that, guys. I don't think there's much else out we can talk about. Unless we want to look at some bearish signs. And so all I'd have to do is refresh this. Get our trade success score back to 0. So this is cool. You can use this for bullish and bearish scenarios. We'll just go straight down to the bearish trades down here at the bottom. Is there overhead resistance? You know, there is on a lot of these, right? So where do we want to go back for that? Bitcoin monthly still at the bottom, looking very bearish, by the way. So as we know and have already talked about, let's see, where to go? And that there, okay, say. So basically, what the hell was I talking about? Hong Kong Bitcoin Ether attract over 200 million on day one. What is this? Hong Kong Bitcoin and Ether ETFs attract 200 million on day one, but but they only put 12 million in. That doesn't make sense. Anyway, it doesn't matter. We're getting some mixed signals on there, but maybe it was in, I don't know. I'll unpack that later. So we were talking about, so basically the bearish signal on this is below the 21 and 50 day EMA. Bitcoin down 3,600, of course, down into a buy zone. I would say we get a bit of a bounce here, but the problem is we're below the ice, below the 21 and 50 day ice, I call it. Going to be really tricky for it to get back above. I don't see us getting back above 64K for a while now, a couple weeks, maybe into end of May. Back to the worksheet, though, overhead resistance, right? All red radar, so we can start to get a negative score, which you can use for shorting or, you know, lightning positions and things like upper Bollinger Bands we talked about for taking profits. Not seeing any of that. 3 inside down is a candle formation, so you can check on that. And, you know, and if we get bearish ERIs, et cetera, et cetera. So you guys can download that for free, like I mentioned. All right, you guys. Well, I think that's about all we have time to cover. We'll go deeper tomorrow in the M3 Active Trader class, so please join us if you're not already signed up there. This is our best high-level training for active traders, if that's you. And we've nailed some really big inflection points as well as good trades. You know, they're not all winners, and you need to know when to get out of these. And so that's what we talk about a lot of times is, all right, guys, this is maybe when to sell out of and take some profits here. But being positioned in front of this next move, I would say, is very, very important. And you guys can read more about that here if you're not already involved. So, all right, you guys. And if you're watching the replay, great. Well, thanks for showing up. If you're watching on YouTube and you like the content, please hit the like button, the subscribe button. We're trying to spread the word. We do have a unique angle. And, of course, we're here to help you guys in any way possible. So, anyway, thanks, everybody. Have a great week, and we'll talk to you next week. Take care.